Okay, those are the commodity calls this morning. Let's shift focus back to equities. Will the markets react to the exit polls or will they wait for the grand finale? Let's quiz and ask that question exactly to Manish Sonthalia. He's with Nikunj right now. Nikunj?
Thanks, Aisha. And I think that's the big question, that how much of the upside is already priced in. Bear in mind that we've already seen a monster rally of about 300 points plus on the Nifty. And as a fund manager, I think these are interesting and challenging times, Manish, because interesting because the NAV is going up, challenging because the market has seen a frenzied move.
I mean, absolutely. This sort of exit poll, if these projections were to come true, you're going to see markets fly, Nikunj.
Fly? I mean, already we've seen markets fly.
No, I mean, you're going to see a monster of a rally even from these levels. I'm not talking about the immediate short term, but from a 3 to 5 year point of view, you're going to see the markets going up only. Fundamentals will come later. Market will try to price in most of the positives that a very stable government can provide, and chief among them being GST. Because it's only the BJP states which were resisting the GST, and that could add, as some eminent industrialists say, 1.5 to 2% of GDP, and that could change the entire scenario.
Fair point. So I'm with you that on a 3-year basis, on a 5-year basis, things are looking interesting and maybe things are looking up. But let's talk about today, tomorrow, this week, next week. Today markets will react to exit polls, and on 16th we have a grand finale. As a portfolio manager, how are you approaching this event? Are you happy to approach this event with long positions, or it's time now to raise some cash, maybe wait for better entry points, because the move has been extraordinary?
So the decisive, call would only be taken on 16th when you see the actual number. These are all projections whereby most of media people are saying, or the exit polls are saying, that you have a full-fledged majority. I mean, that is not priced in the market.
That's not priced in.
So
at 7,000 on the Nifty, when Nifty is trading at a P multiple 15 times plus, inflation is high, bond yields are above 8%, you are still saying that a stable government will take the markets up?
It will.
I hope against hope, Manish.
No, it is that way. You could see the markets in fact touch 7,800 to 8,000 just after these numbers. If these numbers were to come true, I mean, you could see the markets fly. The only dilemma is that the most hated names on the street in terms of stock names are the ones which are giving you the best returns today. How do you position your portfolio? Whether you jump into these names or whether you stick to your philosophy of quality growth, that is the entire dilemma. I think we have got...
What are you doing?
I mean, as of now, we are not doing anything till the 16th, because exit polls have got it horribly wrong in 2004 and 2009. But the caveat is they have got the assembly results in terms of exit polls fairly correct.
No one predicted up.
Yeah, nobody predicted up except for Delhi elections. If you see the other states, they have more or less got it right. But caveat is 2009, they got it wrong. 2004, they got it wrong. But given the voter turnout and, most people are quite vocal if they want to have a change. And if that be the case in terms of what the exit poll shows you, I mean, we are going up.
Okay. As a fund manager, you could have a different strategy because you have a different set of clientele, you have a different time period, but a lot of our viewers who are watching the show are retail in nature. How should a retail investor really approach this event? I mean, that is the big question, because for those who've bought at lower levels, they're already in the money. There are some stocks which are already in overbought zone. Is it time to, let's say, lock 25 to 30% of gains now?
No. I don't think I'd agree with that, because I think, there's a long way to go. These numbers will really take the markets to newer levels, and not only in the immediate short term, but even in the next 1 to 3 or 5 years point of view. This may be just the beginning of a very, very strong bull market. Yes, we are talking at 7,100, but that's the way it is. 7,000 could be the floor on the Nifty.
What about earnings? Ultimately, markets are slave of earnings. You know that better than me. There is no evidence of any kind of a big economic turnaround. Whatever sectors or wherever growth is coming, growth is largely coming from exporters, IT and pharma. And unfortunately, in this leg of the rally, IT and exporters are taking it easy. So companies which are growing are not, those stocks are not moving up. Stocks which are growing up, or prices where stock prices are moving up, those companies are not growing.
No, that is, driving, looking at the rear view mirror. You have got to think as to how the things could play out in the event of a change in government. As I said, GST is the next big event. And that could throw the entire earnings picture into a tizzy. Because you know that the number of taxes are going to go down. The cumulative impact of those taxes which you pay today are going to be lesser than what you are going to pay, which you are paying today, and that is not going to be entirely passed on to consumers. So you are looking at a margin expansion, and markets really reward margin expansion like anything.
So what you're making or your case is that right now good times have just started and one should not cash out early, because if you cash out early you pretty much will not be able to maximize on the opportunity. Manish Sonthalia, hold on to that thought. Let's take a quick break, but before we do that, zoom the camera across. I just want to establish shots of India's biggest dealing room. We are coming live from India's biggest dealing room to capture all the excitement, all the action. 2 days we've seen a 300-point rally on the Nifty. SGX is telling us that we could add another 100 points more.
Back for trading calls right here on ET now. It's a rip-roaring ride that we've had on our hands. The last two trading sessions, 7,000 here, the SGX Nifty. Guess what? That is already perked up a good 1%, 7,100 and only climbing higher. It's 1.25% move that you're seeing for the SGX Nifty this morning. So let's just wait with bated breath in terms of what transpires once the opening bell kicks off. But Mitesh, want to come to you for your trading ideas as well.
For the day, I would suggest a buy on Tata Motors with a stop at 437, short-term targets of 465 on the upside. Gas Authority is a buy if it starts trading above 385 half, that's the breakout level. Buy then with a stop at 379, targets of 400. Hero MotoCorp is a buy with a stop at 2272 for targets of 2375. ITC is a buy with a stop at 355, look for targets of 380 and buy above 363. PC is a buy with a stop at 67 half for targets of 74.
Okay, lots of news data points as well to react to this morning. First, I just want to bring up the flashes that just came by on Mangalore Chemicals. Now that Mangalore Chemicals, or rather Zuari Fertilizers and others have made an open offer to acquire 26% stake in Mangalore Chemicals. They've, Zuari Fertilizers, they've set an open offer price of 68.55 bucks per share. Zuari Fertilizers has made an open offer with UB Holdings, Kingfisher Finwest, McDowell Holdings, as well as Zuari Agro for Mangalore Chemicals. So these are some of the stock data points that are going to be in focus. But there's also been a diesel price hike overnight. So yes, sure enough, the OMC basket too would perhaps react to the news. Ashwini, anything that you are liking out of the OMC lot, considering oil and gas has been an active pocket of late?
Well, liking not in terms of buying today, but obviously these are outperforming stocks, and whenever they do go through a correction, there should be, tops on your list. But right now they've all gone up, 4 to 5 sessions. So I don't think they are great buys currently. And I talk from a swing trading type of perspective. Obviously, if a long-term bull market is starting out, entry points start to matter less and less. But you need to have a stop that's reasonably close. The stop right now on most of these things is 8 to 10% lower. So obviously, I think easily 20-25% further rallies should be expected. But again, buy on declines.
Okay, we're on here. Okay, Manish Sonthalia, HPCL, BPCL, that's the flavor of the moment. In fact, as we speak, BPCL is the biggest gainer on the Nifty this year. What's your sense there? Long way to go for HPCL, BPCL, or now these stocks are priced to perfection?
No, Nikun, they are not priced to perfection. In fact, last night we saw 1 rupee 9 paise increase in diesel prices. I mean, the conviction to raise diesel prices even now when the under recovery is less than 6 rupees a litre, that is what Kirit Parikh committee recommendations was, that you could stop at 6 rupees a litre, increase the prices. But we are just 12 months away from full deregulation of diesel. I mean, that's going to change the entire trajectory. So you could see a situation where these companies could be, 15 to 20% ROE companies. I mean, then you won't get it at these valuations, for sure. But the whole thing is whether the new government or the present government, whatever, have the will to really pull the plug on this one. Just keep on increasing diesel prices, because the under recoveries are going to come down by almost 50%. We are looking at 1,20,000 crores as the under recovery is going to come down to something like 88,000 crores. That means profitability, the interest burden on companies like HPCL, etc., are going to come down significantly. There's going to be saving on interest cost, and ROEs are going to move up.
Okay, so let's look at OMCs. There are three listed OMCs: HPCL, BPCL, and IFC. All of them have different dynamics. BPCL promises you a global exposure. HPCL promises you a big exposure to diesel. That's where all the problem is. And IFC gives you access to brand, size, and new refineries. So out of the three listed OMCs, which is the best one to buy?
Well, look at it this way, the two OMCs, the HPCLs and the BPCLs, each have a turnover of more than 2 lakh crores.
Yeah.
And what is the market cap? Roughly around 15,000 crores, 330 crores is the paid up equity of BPCL. You're getting the entire company for something like 15,000 crores. And how is that possible? Obviously, the net profit margins of these companies are abysmally low. When you have these things going away, the net profit margins are going to, and the turnover is huge and only growing.
So you like BPCL?
I think the BPCL offers you a very balanced play on Mozambique, where I think, according to my calculations, even given the amount of money that they are going to require for exploration, they are going to generate a 20% ROC on that business in the long run. I mean, that's not there in the film. But the whole call is we have got to believe that this event is going to play. That this 50 paisa hike in diesel prices is just going to continue. It's not going to stop.
Okay.
That is.
So long oil marketing stocks, that's a broad call.
Long term, it looks like a good play. Let's see.
Let's see. Anyone's guess. Okay, Aisha, before I hand it back to you, I just want to once again, show pictures of this dealing room. This was a deserted dealing room at 8 o'clock when I walked in, but now there's hustle, there is bustle, phones are ringing. I'm getting a sense that there is some degree of excitement. As of now, there is a lot of hope, there is excitement, but for sure, when you are coming from India's biggest dealing room, you can't complain.
That is the biggest joke right now in the office, Nikunj. Were you the first one to walk into the Motilal Oswal office today or not? Okay, that's the snapshot of India's largest dealing room, Motilal Oswal headquarters. Nikunj coming in live from there. But the big talking point also this morning, aside of course, the market momentum as well as the exit poll data, is also the macroeconomics. While markets may choose to ignore that in the near term, that is the big debate, that once the frenzy of the election as well as the outcome settles down, the macroeconomic picture is looking bleak. We saw that in yesterday's data with the CPI as well as IIP, which may have come in a little higher than what we saw the previous month, but nonetheless, it is a contraction of about almost 0.5%. So let's bring on board Agam Gupta, MD at Standard Chartered Bank, FL Trading, that is. Agam, hi, morning. Firstly, a word on what you're making of the headline CPI number, because that is, remained elevated but is seeing a mild easing. What is your own sense about what we may see from the inflation data and thereby the monetary policy? Because a lot of people are now saying that forget about any rate cuts, if not a rate hike this entire fiscal year.
Well, I think we have to watch out for what happens in the monsoons. If we get a good monsoon, there's a good chance that the headline CPI trends downwards towards the second half of the year, and that's when we can, get readings below 8 and close to 7.5% and 7% also. That's when, till then, I don't see any chance of a rate cut. So, I mean, I don't think for the next 6 months there is any chance of a rate cut. People might start building up expectations of it once CPI comes off.
Agam, what's the view then on IIP? Because that has contracted further. When do you expect to see a recovery and it turning into the black?
I think once the new government is in place and if it proves to be a stable majority for the NDA as the exit polls are predicting right now, you will see kind of investment and capital expenditure pick up once that big uncertainty is out of the way. And the second half of the year should definitely look better once that happens.
The positive Agam of late has been that the currency as well is getting excited. Although yesterday I may say that it flattered only to see it went back to the 60-odd levels. You've seen what the exit poll projections are for the NDA, and they do seem to be indicating a strong win. What's the sense that you're getting? Further strength in the currency?
Yeah, I think we should wait for the 16th May final results. But if the final results come as per the exit polls, and we get a 270-ish number for the NDA, and they form a government comfortably with a full majority, we should see further. We should see some inflows into the country. There already have been some. I think there will be more inflows into the country. I think once that happens, even RBI, who's been buying dollars around the 60 levels, will probably be okay to let it go a bit. And by as we go forward by June or something, you could see levels close to 58.5.
Okay, Agam, good chatting with you. Really appreciate you taking the time out and speaking with us today. That's the view on Forex as well as the economic data points. The pre-open rates, counting down to those, let's see what is the big bang figure that we see, considering the SGX Nifty is indicating a fair amount of strength this morning. 7134 on the SGX right now, 1.3% higher is where we are at. The exit polls are projecting a strong win for the NDA, although the Times Now poll, I might add, is the most conservative of the lot, but the numbers are ranging anywhere from about almost 249 to about 340 as well. Some of them are as aggressive as that for the NDA. But let's just wait by and see as we trickle in and gear up for the pre-open rate this morning. But a couple of other stocks which ended up really leading the market move yesterday. We've been talking about the strength across the banking pack on a daily basis. HDFC Bank had a due contribution to the market in yesterday's trading session. And Matish, I just want to come to you on blue chip boys like HDFC Bank, ICICI Bank, which have been aiding the market move. Further strength, what do you foresee?
I think eventually, yes. I think in the short term, difficult to guess after today's opening whether we will see these stocks sustain at higher levels, purely because they are extremely overbought on the short term charts. But if you talk about the Bank Nifty and all these stocks in general, I think the Bank Nifty after a long time has broken out of 13,350 levels, and that measuring target gives you suggested levels of around 16,500. So definitely there will be more upsides happening in banking stocks. But in the short term, I would not be looking this as the best entry point. Maybe after some consolidation or pullback, if that happens, and whenever that happens, could be next 1 or 2 days, that's the time possibly to get into all these banks.
Ashwini, a big move yesterday in some of the mid-cap names, the likes of a TVS Motor, Gujarat Pipavav, Punj Lloyd. Anything which is looking good for a buy today, or was this just a one-day pop-up, besides, of course, the move in TVS Motor, which has been consistent?
See, once you have this sort of a bull market, the worse the stock, the more it will move. So the bigger the blue chip, those stocks have already moved. So a Punj Lloyd can easily go from 30, 32 to 46, 48 just because some projects start getting cleared. So TVS is the choice amongst these three stocks, and that could get up to 130, 135.
Okay, 70.82, that's the first take on the pre-open rates for the Nifty, and yet another fresh high, 1% higher now, 70.85, and still playing catch up to the market mood this morning. Remember, the global data points are supportive. You've got an SGX Nifty which is perked up 1.25%, and this is not just right now, but the minute the exit polls started trickling in. 70.59 now, so it's easing off just a wee bit. That's the Nifty in trade for you. The Sensex, well, relatively tempered, you'd have to say, higher, just marginally, 0.2% is what we're at for the Sensex. I think the biggest newsmaker this morning has got to be the currency, 59.68. So yet again, you are seeing some strength being picked up for the currency market. 59.68 now for the rupee. Good time then to bring on board Manisha as well to talk about the currency moves. Manisha, I hope it doesn't turn like a yesterday situation, flattering only to deceive by the end of it.
Well, that is something you really need to watch out for, Aisha, because we have seen the rupee breaching that 60 mark for 5 sessions now, but the closing has always been above 16 as how we have been looking at it. Yesterday, we did touch a 10-month highs at almost 59.5, but the closing was yet again above 60. There have been reports of heavy dollar buying intervention by RBI, and that had pulled the rupee off its highs. But yet again, today you are looking at much more firmer positive cues, and that really could be supportive for the currency. The Indian equity markets have been trading on the higher side. The exit polls have reinforced much more confidence now into the markets. Most of the Asian currencies also are trading on the higher side, and that really has been supportive for the rupee as well. Something that could be bothering the rupee really would be the IIP numbers yesterday, which does tell you that the growth is still lower, the inflation numbers are still higher, the monsoon concerns are still into the market, there are no new job profiles being created. So those are a few sectors that you would have to watch out for, but the new government of course will have to tackle a lot. For the very near term, while we are looking at very high volatile moves into the currency, a near term range really is coming out between 59.20 on the higher side to 60 on the lower side now for the near term.
Okay, important to also talk about the dealing room chatter this morning. The 3 stocks to watch with Ajay. Ajay?
Good morning, Aisha. Aisha, Tata Motors is one stock which is a high beta large cap stock with enough room on the upside from the FI buying limit side. Right now, a lot of FI dealing rooms are indicating that the clients are actually looking for large cap stocks where there is headroom on FI buying. So this is one such stock. Overnight, the global JLR sales for the month of April has also been released at 30%, which is slightly on the higher side. 26 to 27% was the estimate. So watch out for this one. From the corporate development side, there's again an open offer made by Zuari, this time for Mangalore Chemical, but it is Deepak Fertilizer, one stock which a lot of big shot HNIs from Bombay and Calcutta are accumulating this stock. Deepak Fertilizer, which is actually a chemical company, more than 50% revenues coming from specialty chemicals, trades at 1/3 market cap to sales, and if assuming that Mangalore Chemicals also comes here, it can go up to extremely cheap valuation on the market cap to sales term. Then a lot of accumulation happening there. Keep a watch on that one. And the last one is the short idea on Cipla. Well, the pharma index closed at day's low yesterday. Cipla was also witnessing fresh shorting of positions, and dealers do recommend continue short on that one. Expectation that fund flows are there from the FI desk. Apart from that, the Q4 results are expected to be extremely weak as well.
Right, Ajay, thanks a lot for that. Manish, the newsmaker this morning indeed is rupee. It's gone below 60. The easy trade is if rupee appreciates more, exporters will underperform. IT, which has been an underperforming sector, will underperform more. Is it time now to think smart and outsmart the market, be a buyer in IT?
Look, Nikhil, there's going to be a deluge of dollars. There's no doubt about that. You'll have a lot of money coming in if these numbers are to be true. The whole point is that rupee is going to appreciate. But my sense is the central bank is not going to allow significant appreciation. Why the market's worried about IT and pharma names today? Because if rupee appreciates by 4 to 5%, there's going to be an earnings cut. That's basically the trade that is playing out. I don't think that is going to happen. The central bank is not going to allow, because it's going to impede your exports. And at this stage in the economy, India can least afford a dip in exports due to currency.
But the central bank has again and again gone on record and has indicated that, look, we are not in the business of controlling the currency. We are simply in the business of managing the volatility. So job of any central bank is to really smoothen the curve. They are not going to protect the rupee or help the rupee. When rupee was falling, they were not supplying dollars, and now rupee is appreciating. They are not absorbing dollars.
I mean, see, of a size of India, the economy size of India, $1.89 trillion, dollar reserve, forex reserves of $300 billion looks a bit small. And it's a godsend opportunity. If due to sentimental reasons, there's a huge deluge of dollars, I mean, central bank would be more than happy to build in forex reserve. It's only going to help India's cause. Okay, there's going to be more stability, etc. Which is going to move things forward as far as the interest rates, etc. are concerned. I mean, there's a big play. If there's a whole deluge of dollars, you're going to see interest rates actually come down. I mean, caveat monsoons, etc., inflation.
Okay. That is, as we speak and after this interview, what are the stocks you're planning to buy?
No, Nikhil, I am staying status quo till the actual numbers are declared on. If these numbers are declared on 16, there is a case of making.
So are you happy to buy at 7,500?
I'm telling you, these markets are going to be seeing a 7,000 as a floor on the Nifty for the next 3 to 4 years. If these numbers are to be true.
Okay, so what will you buy first? Assuming that exit polls, the markets get what they want on 16th of the 3 stocks. Tell me the names.
I mean, it's difficult to tell you the names, but what I'm saying is there is a case for movement into cyclicals, but we will not deviate from our philosophy of quality, growth, longevity,
Give me some names which you're happy to buy, let's say 5% higher once you think the event factor is out.
I mean, capital goods, infra, these are some of the names, but within them, which are the good ones? You know, that is, and I think one really play, if you want to play everything related to the cyclicality of sectors, you know, the rotation of sectors, it's going to be banks. Everything gets
names. That's what you want to.
I mean, you know the names. You know, stay away from the public sector names. There are problems galore.
So HDFC Bank looks good.
HDFC, Axis, ICS. I mean, we are not going to buy all of them, but these are some of the names. Private sector names, quality. Banking sector is going to be a big beneficiary if these numbers
so
are
stick to banks. Manish Sonthalia, appreciate your time. Fantastic to have you on the show. Aisha, for the moment, it's back to you. The sense I'm getting from dealing room is that today we are in for a good day.
Okay, but a little bit tempered, you'd have to say, at least going by the pre-open rates, and I just want to revisit them, or I think we finally stabilized about 0.7% higher for the Sensex, which was looking a little bit iffy, at least